All right, amazing, guys. Once they solve the scalability issues, we'll start solving the user issues. We've got a great panel here today. We're going to be talking about emerging markets. As you may know, I'm from South Africa, which is emerging markets. We've got a Turk, we've got an Argentinian, and then we've got an American who had a great fight last night at Karate Combat. Maybe we should just get like the elephant out of the room. Do you want to just walk us through the fight yesterday? What happened?
Sure, I think I hit a little bit of a wall with respect to the gas tank, but what are you going to do? I'm 47, he's in his 20s, you know. Sometimes you win some, sometimes you lose some, but got 9 points on the guy. He wrestles for Singapore's national team, but he stuck me pretty good at the end there.
Amazing. Well, you look good for someone who just came out of a fight. I'll give you that much.
Thanks.
Okay, so let's talk about blockchain usage, and I must say this is a topic which is quite close to me, and the reason why it's quite close to me is if you think about the places where blockchain development has been happening traditionally, it's been places like the US, places like Singapore, places like Korea. And I always laugh when Americans sit in a boardroom and tell me how the Africans are going to adopt this blockchain technology that they're building in the United States, because none of them have ever been on the ground, haven't ever seen how people actually work there. And so I always laugh. But I do think that blockchain is actually needed in emerging markets. If you think about what blockchain is effectively the ability to create digital value that you can send and trade immediately. In the US, there's a very, very, very good financial system. Most people are banked. You can kind of transfer money wherever you want without any questions being asked. There's not really the concept of exchange controls where you're not allowed to take money out the country. And when we think about emerging markets, Argentina, Turkey, South Africa, we have all those problems. You can't send money out the country. In South Africa, we're very limited. In fact, to give you a good statistic, in South Africa, an individual is allowed to send spend about $50,000 a year out the country. That's it. Which means that if I'm flying to Singapore and I want to stay at a hotel, and the hotel costs me $1,000 a night, and I've pretty much maxed out my entire foreign exchange allowance. And so I think that emerging markets are the key to unlocking it, but the question is, I haven't seen real use cases other than Bitcoin storing value and stable coins, which in the emerging markets act as a store of value because you'd rather be in the local, in the US dollar versus the local currency and Bitcoin. And so I think the topic around here today is to really understand the problem. So let's really spend some time understanding the problem from people who understand emerging markets, and then understand how and what emerging markets need in order for Bitcoin, blockchain, stablecoin, any kind of blockchain application to actually do it. So I think, I want to start with you, Martin, because Argentina, as we said, hit the bottom and now kind of like turned around. Tell me about blockchain usage in Argentina, like really.
Yeah, so I think of blockchains as a ledger to export some kind of financial system to the world in a free way that's very hard to block, right? So if you think about the dollar, that's what most Argentinians, when they say, I'm going to buy dollars, it's the equivalent of what an American would say, I'm going to save for the future. Buy dollars is just the verb that you use.
Dollars are a store of value.
It is a store of value, and people use dollar cash, and they keep it in the mattress, and you never sell the dollar. It's diamond hands. So it's like selling dollars is the equivalent of I'm in a tough place, right? So it's a constant buying of dollars and hoarding of dollars, which is not great, right? Like we know money printing is a continuous thing, but it's a lot better than the money printing of the Argentinian peso. So Argentinians have been trained to essentially escape the Argentinian peso. Inflation last year was 150%. This year it's coming down, it's only at 30% annualized.
Is there a limit, or were Argentinians before the new president, were Argentinians allowed to hold US dollars or to buy US dollars? Or was there a black market where like if you wanted to buy US dollars, you'd be paying someone a premium of 10, 20, 30, 40, 50%.
It's still the case, actually. So in all of my professional career, buying dollars has been restricted, whether fully restricted, with some permission. You can buy $200 at some times. Argentina has had the blue dollar versus the official dollar, and the gap between the two has been like 40%, 2x, 3x. It fluctuates. But if you want to buy dollars, usually people mean the blue market, because that's the only market that exists. And yeah, that's the free dollar, if you will. And the official dollar is, I don't know, for friends only. You could say it's legal corruption. But the real dollar is never touchable, right? Like most people cannot interact with the official dollar in Argentina. So stable coins essentially are a way to disrupt that blue market. And if you think about that blue market, it's a shop that you have to go underground and you have to exchange paper money. You don't know if you're getting counterfeit money or not. When you exit, they know you have dollars, so you're in a place that's not that safe. You might get robbed. And then it's very hard to shop for prices. You have to go visit several places. Suddenly you have stable coins and the pandemic, which also blocked going to the stores, and actually you can buy online, and stable coins went completely vertical in Argentina.
So if I was in Argentina at the time of stable coins, how would I have got my hands onto stable coins? What's the money flow? I understand when you meet someone in the street and you have a bag of money and you give him a bag of money and he shows you that he's transferred stable coins and you don't leave each other until the transaction is complete. But if I'm sitting in the pandemic, how did I get my hands onto stable coins?
So one is that, like you would order through WhatsApp, a guy in a motorbike would come with a bag of, with a phone, you would give them a bag of cash, they'll send you the USDT on Tron, most likely, and that's a transaction. And then a bunch of apps started coming up where you can transfer money through the traditional payment system in Argentinian pesos and buy through exchanges. And the exchanges gain a lot of momentum. And today they are the best exchange rate that you can get versus anything else.
How have things changed since Javier Milei came into power? I mean, he's pro-Bitcoin. He seems to be very right-wing. He seems to be very libertarian almost, you could say. Mm-hmm. How have things changed? Is he still, I mean, has the rate between the black market dollar or the blue market dollar and the real rate, has that compressed slightly?
That is compressing massively. So there hasn't been 1 peso printed since Milei took power. So the M2, that's amazing, yeah. He has since February, he came in January. January, we had a deficit. Since February to today, surplus every month. Inflation is coming down insane, so the dollar has been flat, the blue dollar. And the official dollar, he's like every month, increasing, moving it until they converge, and that's when he's gonna free the market. So you would think you don't have to buy dollars anymore because there's nothing coming out of that printing machine. But Argentinians are trying to buy dollars, so they keep buying them, right? And I think that's not going to change anytime soon, right? Like, you have 40 years of people teaching you, don't buy the peso, and people will continue buying dollars, I think.
So I don't have official statistics, but what do you think the real statistics are in terms of blockchain adoption in Argentina? It was estimated in the United States that between 1 in 4 and 1 in 5 people had some kind of exposure to crypto. Honestly, because none of us have been to Argentina. I mean, I've been there before, but I haven't been there in my crypto career. By the way, if any blockchain organizers are watching, we need an Argentina blockchain week, just so we can all go and have a look. But what do you think the real rate of adoption is? Because it's easy to say, oh, wow, emerging markets need crypto, but how many people are actually using it?
Yeah, I would say it is very high in the niche that you would think actually buys crypto. So if you take out very old people, their adoption there is lower. My grandma, she's 87 and she uses crypto, but that is not the standard. Some of her friends don't. So she uses that because it's easier than going to the shop. But she's my grandma. If you take out the people who don't have any money at the end of the month, they also don't use crypto. Everyone else, I would say the adoption is like 80%. So it's more likely than not that you will have interacted with crypto, and most likely it's going to be stablecoins.
Let's move to Turkey. So I guess Argentina was on the way down, and they got a very right-wing president, and there was a turn. Turkey seems to still be, if you look at the currency, if you look at the economy, it seems to still be very much on the way down. Is crypto really a thing in Turkey? Like, is it us bros here wanting it to be a thing, or is crypto really a thing? Do people really look to crypto as a store of value?
Yeah, sure. So maybe just to put things into context, like Turkish currency has lost its value. Like USD to Turkish lira conversion rate was around 3, and then now it's around 33, and that happened in the last 5 to 6 years.
That's pretty good.
We had a short period where everything happened. And then I think at the peak of the currency crisis, this was the time where people started using cryptocurrencies and stable coins mostly for access to US dollar as well as better conversion rates. I think in that sense it's pretty similar to what happened in Argentina. One difference is, if I understand it correctly, so there's a very well-established cryptocurrency exchange ecosystem in Turkey. There's Binance, who's actually probably one of the leading, and then you have Paribu and BTC Türk. These are the 2 largest local cryptocurrency exchanges, and the last numbers that I remember, back in 2 years ago, Paribu had like 7 million users actually. Yeah. And I think it's around probably 10 to 12 million users at this point. Probably BTC Türk has another number like that.
Yeah, so just for those of you who don't know this, I mean, we track exchange usage statistics because our revenue model involves people signing up to exchanges. And one of the most sought-after markets in the world is actually Turkey for exactly that. They seem to be very crypto-savvy. They also seem to be a bunch of degens, bro.
Right, exactly. So what happened was, I think in different cycles of the market, there are different use cases that Turkish people are looking for as well. It was mostly speculation and nothing else, up until 2021. And 21 is when the currency crisis has peaked, and this is the time people start using it for access to dollars, right? And if you go to Binance, like website traffic metrics, Turkey is always top 3. Like I think it's along with some other countries, depending on Indonesia, Nigeria, and some other countries, Turkey is always up there, like one of the top users of Binance.
So, I mean, there's people that are buying crypto because they're a bunch of degens who want to buy Sundog on Tron Network. And there are people that are buying crypto because they genuinely want to protect their families' fortunes and family money against inflation, I'm looking at the depreciation of the lira. It's a 80% depreciation in 5 years.
Exactly.
It literally is at 20% of its value in the last 5 years. Right. How many people are actually buying crypto as a hedge? Like really to protect?
Right. I think that number has changed a lot. Probably it turned from somewhere from 20%, 10%, all the way to 80% in 2021. I was also one of them. Like we transferred most of the holdings back in Turkey into US dollar and stable currencies. Turkish people normally hold gold. Like this has been traditionally, you buy gold, you keep it at your home under your pillow. Like we have this sort of a culture. But then this has quickly translated into USDT and stable coins as well, and mostly dollar too. So another thing to mention is it's actually a very well banked population, right? Like banks are still there operating in a very healthy way. But then the spread was very high. If you wanted to get dollars, the spread was very high at the peak currency crisis. So that's why people started using cryptocurrency exchanges instead of banks. Now things have settled a little bit, so people are going back to banks, but then they already got exposed to cryptocurrencies, right?
I'll actually tell you an interesting story before I come to you, Matt. You know, everyone talks about Bitcoin and gold, and my family are from Iraq. And in Iraq, in the 1950s, they expelled all the Jewish people. And my family were very rich goldsmiths. They were very wealthy. They were extremely, extremely wealthy goldsmiths. And they gave them 24 hours to leave Iraq. They said, look, in 24 hours, you're leaving Iraq. And my gran tells me the story of how her family melted the gold into a barrel, like a small barrel that they could take it with them because it was their whole fortune. When they got to the flight that was to move them from Iraq to what was then, it was Israel, but just became Israel, they said, the gold stays. You can go with your clothes and they literally went from being a very, very, very rich family to not being able to transport their wealth across borders, and they landed up in Israel, and for the first 6 years of their life in Israel, they lived in a tent, in an intake tent. So I really understand the need, so to speak. Matt, I want to go to you because I know you've got some strong opinions around what we've built in the blockchain economy, or what we've built in blockchain in the last couple of years that helps for emerging markets. We had this discussion the other day, and I said it's kind of like, well, it seems like all we've built is we've built the ability to transfer fiat cross borders at the speed of data and a store of value. And that's pretty much, if I look at the achievements of this industry in the last 10 years, I kind of really think that that's all we've built. We've built two things. One is we've built a digital store of value, and two is we've built the ability to take fiat money, digitize it, and be able to send it to each other very quickly. Am I right?
So I would start by saying this. First of all, I think that the anecdote that you shared just now is so fascinating because that's consistent with my theory that you can really learn so much from emerging markets because you have these kind of like extreme mode experiences, whereas the relationship with crypto, the use cases, the necessity of it can be really much more tenuous in the United States, I think. And so at Ryze, with our emerging markets competency, we have boots on the ground everywhere from Latin America to India, China, throughout Southeast Asia and such. So we are able to have kind of some unique insights from being able to see a wider landscape. And I think for sure one of the things that we found is that stablecoins by far and away are the most astonishing product market fit in our industry, but also I think in tech over the last 10 years, not just crypto. We're pushing on $200 billion right now, which in the landscape of TradFi is still kind of a small number, but this is becoming a really, really big business really quickly. And you can even look at facets of that, such as Tether. Tether has low-key built one of the best businesses of modern times, right?
Was it $6 billion a year in profits?
Yeah, being able to, they have, I think, a couple hundred employees, and being able to clip that interest quarter after quarter. In plain sight, they have built one of the best businesses in the last decade, in any industry. So I think there's some truth to the fact that our PMF in our industry that we have absolutely nailed down is kind of limited to a subset of things that include stablecoins and maybe a small number of other things. And beyond that, we're still in the experimentation stage. But I would caution against trivializing an almost $200 billion product market fit. I would kind of start with that. But then
I concede there that I think initially when I said it to you on the call, I said to you that we've only created 2 use cases. Post-reflection, actually I think what we created when we created stablecoins it's mind-boggling. The ability to send fiat money from one place to another.
And in fact, I think that almost no matter who you're talking to, it's the best way to start a conversation about crypto and why it's actually really cool and kind of important to be able to say, what if I were to tell you at dinner here today that I could, from my phone to your phone with a little bit of setup, I could send you any amount of USD equivalent from 3 cents to millions of dollars. And we could do that in such a way that it's going to land almost instantaneously, and the transaction fee is a rounding error at best. And I think that's a pretty astonishingly vivid way to say that what we're doing here actually is pretty important, especially for people, even we're still in T+1 settlement time for much of TradFi. we still have to sometimes go through weird approvals to do international wires and stuff like that. And to be able to kind of sidestep that, and we can do it here at a, here up on stage or at a dinner or whatever, we can just bang it out. It is pretty astonishing to me.
Yeah, I would say even more astonishing it is.
Yeah.
We are at this stage with stablecoins being in practice almost illegal, right? So very hard to on-ramp, no bank wants to touch it. How do you account for them? So it is being a retail phenomenon.
Yeah.
No large business is touching this without an intermediary basically abstracting it to fiat. Now imagine next year we get stablecoin regulation in the US, Bank of America gets in. Who's not going to buy a Bank of America USD in Turkey, in Argentina?
So
it's like, I think we're going to be 10xing, 20xing. And the question there is, if a huge chunk of the M2 of the money in the world is in stablecoins, what changes there? And
this is so interesting to me.
So you've hit the nail on the head, and I think two things here. Yeah. One is the importance of a Trump presidency, or a crypto-friendly presidency, which the Democrats right now are not showing.
I would say it doesn't matter who wins. The Treasury needs to find buyers of bonds, and the only opinion, the only place you can find $1 trillion of bonds to put in is remove the Argentinian peso, the Turkish lira, and replace it with dollars. And how do you do that in a cost-efficient way? I cannot think of any other way than stablecoins. So I think it's going to be Yellen or whoever comes after pushing Congress and saying, hey, we need this. Do it with your mouth shut and pass this regulation.
So I think a lot of people don't realize what you're saying, but there's a chart that shows the amount of government, US government treasuries that Tether Corporation holds relative to other countries. Yeah. And it's becoming one of the biggest holders in the world of US treasuries. And so as much as maybe the US government doesn't like USDT,
it's a client.
It's a client.
Tether is a client of the government, yeah.
And sorry if I may, here's the thing too, which is so interesting to me. I think people in general are seriously underestimating the extent to which United States dollar hegemony is being chipped away at. As people start to move towards RMB settlement, Russia has a lot of incentives, as we know. A lot of these things can happen very slowly and then kind of all at once, as the famous saying goes, right? And so I think and I know in our crypto industry, some people would question the idea of if USD hegemony is actually something that's good for the United States. And that's maybe a separate conversation. The mainstream economic consensus, though, says it's extremely important. And if we were to just accept that premise for a moment and think about the fact that, to some extent, USD hegemony is on the wane, the best way to actually extend the runway of USD hegemony is for the United States to go all in on crypto. Because even though it's a rounding error today, in $200 billion is enormous, but it's also, in the scheme of international transactions, it's still a rounding error. But the rate of increase, this is our best way. If you accept that USD hegemony is overwhelmingly in the national interest of the United States, which is the mainstream consensus, and I would suggest that that is a true thing, the way to prolong that is for the United States government to absolutely go all in on crypto.
Matt, let me do
the number one best way.
Let me do some math. So there's $140 trillion in all fiat, combining everything. 20 trillion of that is US dollars, 10 in the United States, and 10 outside, euro-dollar market.
Yep.
So 10 over 130, it's about 8% market share. That's the share of the dollar of the offshore market.
Yep.
That is with, no one can open a US dollar bank account in most countries, right? That is with the cost of having these US dollar bank accounts being very expensive because you have all this correspondent banking system, the SWIFT payment is very slow, like all these restrictions. Now, I think that is the kind of the Web 1 era, and suddenly you're putting like stablecoins, which is like you Amazon the thing, you put it online, you make it very easy. Can we double that market share from 8 to 16? I think it's very reasonable.
reasonable.
That is another 10 trillion in stablecoins.
Yeah, so I think what we need is we need the US administration, whoever it is, to buy into it and to see the vision. And I think it's becoming almost inevitable. And I would go as far as to say that that's maybe one of the reasons why they haven't attacked Tether as hard as they probably could have attacked Tether if they wanted to do that. I also think that we started this discussion by saying, seems to me like developed markets are building products for emerging markets. So if we think about the blockchain development hubs in the world, USA, still a big development hub. Korea, still a big development hub. Singapore, still a big development hub. I think the one country that's the best product market fit for emerging market applications of crypto is India. Because India has a unique environment where they have, I think, amongst the best developers in the world, or certainly the best engineers in the world. And they live in an emerging market environment where, I don't know if you guys have been to India, but they have the ultimate use case for crypto in everything that they do. Yet I haven't seen an Indian Naira stablecoin. I mean, I see a US stablecoin. I think the government's very much against it. I think for me, that's where the big opportunity lies. Any thoughts on India and India opportunities?
Maybe just one thing, like about just before going to India. So in Turkey, when the government now created this license framework, so cryptocurrency exchanges can apply for it and operate freely in the country. But then from the beginning, they just prevented one thing from happening, and that was the payment area. So they said, you can do anything you want in Turkey, but you cannot get into payment industry. So this is something that they want to keep their hegemony on.
You cannot get into payments.
Right, so you cannot use any cryptocurrencies for payments in real life. That's
I can't walk into a store in Turkey and...
You cannot, right. So this is the sort of like the red line that they have drawn over there. But you can transfer your money from your bank account to cryptocurrency exchange and buy whatever you want.
So what you're saying is the Turkish government is of the opinion that its residents are allowed to gamble on shitcoins.
Right.
But whatever you do, don't use...
Right. So the implication of that is, I think what they're seeing is, if you start using it for payments, this is basically the acceptance of the stable coins in real life, right? Like it's going to get much more adoption for the stable coin. So that was one thing. So now going back to India, actually, we invested in this company called Flint, and they wanted to build this sort of railway for people to put their money into their account on the centralized exchanges. And they were going to use this money on the centralized exchanges and go farm yields in the DeFi. So they could pay back to Indian people with the DeFi farm yields, right? And then the people who were building it, the entrepreneurs, they used to work at one of the largest startups, like borrowing and lending startups in India. We invested in this back in 2021, but it quickly became clear that they're not going to be able to operate because the Indian government was banning crypto. Like they just switched their opinions on crypto. India is pretty similar to China in that sense, I think. Like there's this allowance of crypto for a little period, and then quickly it turns the other way around. So the company Flint had to pivot into something else after that.
Yeah, I think, look, I mean, it's a personal thing, and I mean, obviously the Indian government has got their own calculations, but to me, if I was the president of a country that had the best engineering skills, or amongst the best engineering skills in the world, and you know, India is very much a country that's on the up, I would want to encourage as much of it as possible, because I've got the use case and I've got the developers in my own backyard, which is quite rare. Like, I don't see a use case for blockchain in the United States. I mean, I lived in the United States. I can do everything I want on Chase Bank with no restrictions. I mean, barring the fact that when I want to do a wire transfer, they want to do a DNA sample. I mean, barring that, I mean, you can pretty much do whatever you want. But I think India is a unique use case. Let's talk about other use cases. So we've spoken about transferring stablecoins from one place to another. We spoke about buying Bitcoin as a store of value, which I think is a great store of value. I'll tell you a quick story about store of value. Before I got into crypto, I built and sold a marketing company. It took me 16 years to build and sell the biggest marketing company in Africa. I sold the marketing company it's a very public transaction, so I sold it for over $150 million. But I signed the deal in January, and it took 9 months for the transaction, for people who've never sold a company before. When you sell a company, you don't just sign the document and then your company is sold. It goes through a process of, there's the Anti-Monopoly Commission that has to give you like a green light, and then there are a whole lot of conditions that you have to do before the actual sale gets done and you actually get your money. I signed the document, and my transaction was in the South African currency, which is called the South African Rand. I signed the transaction in January, and I got paid in September. What do you think the depreciation in my purchase price was between January and September? So I signed the document in Jan, and I got paid in September. What do you think the US dollar depreciation was in that period?
30%.
So when I signed the document, the exchange rate on the South African currency was 1 to 9.50. When I got paid, it was 1 to 16.80, which means that I worked for 16 years. I built the most incredible, amazing business, but currency depreciation made me lose 40% of my wealth, and it was completely out of my control. So when I say we've only created a store of value and we've only created an ability to transfer fiat, those are big things. But I want to move on to other things.
That's why the PMF for stablecoins pegged to currencies other than USD is so limited. People don't want it. USD pegged stablecoins are the lingua franca of the digital franca. I'm pronouncing it wrong. The native currency of the digital world is USD. It's not Bitcoin.
Yeah.
And it's not going to be other currencies either. I will always take the under on adoption of stables pegged to currencies that are not the United States dollar.
I think
which again is why
which is why the dollar is the biggest.
USD hegemony as in the national interest in the United States. Again, that's why it works. People don't want all these other stables pegged to other currencies. They just don't.
Yeah.
And if you look in Argentina, for example, they aren't using Bitcoin as an inflation hedge. They want stables. They want USDT.
Yeah,
not
I would
Bitcoin.
say there is a use case for local stablecoins, but it's going to be 98% USD.
Right.
And then the margin is going to be Forex and on and off ramp simplicity.
Right.
So those two use cases I see, but it's not a store of value. It's a money in movement facilitation.
So the truth then is, which is so fascinating, because for years and years now, we've talked about Bitcoin as the inflation hedge. But if you look at the extreme mode scenarios, actual hyperinflation, what are people doing?
USDT.
They overwhelmingly use USDT or other or DAI. Overwhelmingly use United States dollar-backed stablecoins as their inflation hedge. They're actually not using Bitcoin.
So when I got into blockchain a long time ago, one of the ideas that I saw was a guy told me about a farm or a bunch of farmers in Rwanda who want to insure their crops. And unfortunately, they couldn't get information about the quality of the soil. But since they found that the farmers in Rwanda could be rewarded in cryptocurrency, they could give them, any farmer could do an assessment and log it on his mobile phone and earn cryptocurrency. That obviously never happened. It still hasn't happened. What I'm looking at is I'm looking for other use cases in emerging markets that empower people but don't involve, obviously involve transfer of value, but aren't just buying of a stable coin or buying of Bitcoin. Are there any other use cases that you guys have seen in emerging markets that people are actually using?
Yes, several. So cross-border payments, obviously, import-export. I think that's well documented. You're in Argentina and you want to import bananas from Ecuador. It's way easier to pay in USDT to do that. I think other things that are popping up is kind of like secured loans backed by stablecoins. So the owner of an SMB goes to a bank, the bank will never lend them money. I put stablecoins on a multisig with the bank, myself, and a chosen third party. I put my stablecoins there. The bank is comfortable lending me pesos at a peso rate. So
are you saying that there is a bank in Argentina that is comfortable to take stablecoins as collateral?
With an intermediary. It's called a cosigner. There are businesses that do cosigning. These businesses are doing that, and they're seeing the stablecoins, and then they tell the bank, I will cosign, and these loans are happening. SMB loans in pesos backed by stablecoins.
I mean, I know that if I went in South Africa to the bank and I told them that I had stablecoins, all probability they'd close my account, let alone let me take more money from them.
Yeah, no, and that's why we were saying stablecoins are illegal. You have to have an intermediary. There is these cosigner companies. I imagine every country has them, right? Which allows someone to underwrite and essentially offboard the risk from the bank. And these underwriters are the ones that are taking these stablecoins and going to the bank and saying, the bank, this customer will pay, and I'll take the I'll take the risk if they don't pay, and then the bank is lending you.
What I'm looking for, I think what I'm looking for is I'm looking for applications that create wealth in emerging markets. One of them we saw in the previous bull run was Axie Infinity, right? Where we had a game and these game farms popped up in emerging markets such as Philippines, and people started making money because of blockchain. Now, look, the Axie Infinity since then went up and down, and etc. But are there any other applications where you're creating opportunities in emerging markets for emerging market people using blockchain, other than just protecting your money? So there's one of it is protecting, and one of it is how can we create wealth in emerging markets?
I think that most of them are not sexy, but it's freelancers in Argentina. They estimated 100,000 freelancers work offshore and get paid in crypto. These are normal designer, your normal like executive assistant, not doable in the real system because you get paid and you get cut half your salary because you nationalize the dollar at the official rate. So it's
allowing emerging market people, specifically in Argentina, anywhere else in the world, to be exposed to a US dollar market is a big thing.
To export to, essentially you're allowing freelancers to get paid, so you enable this population to work at a higher value per hour rate.
I mean, I just want to just touch on that point for one sec. Just to give you guys an idea, the parity between examples, South Africa is not cheap, not as cheap as India and maybe even Argentina. But the difference in hiring, for example, a graphic designer is about 3 times the amount in the USA. And so companies actually outsource on the web for much cheaper, right? Which is, again, creating emerging market opportunities because exposing them to higher rates, which are still lower than the US rate.
I was just going to say that real-world applications are always going to sound a little boring and staid compared to the nonsense we talk about on crypto Twitter. So it's always going to sound a little bit like Martin's stories from just now, but it's really important. And, you know, every day, not just the people in this room, but everyone all around the world, every day, day after day, week after week, et cetera, we spend more and more of our time in the digital realm, whether we like it or not, whether it's healthy or not, honestly. The time we spend touching grass is less. And crypto is going to be the rails for this, even though it is early days to some extent.
Okay, so we've got about a minute left. Best application other than store of value, other than USDT stablecoin, best application for emerging markets in crypto?
Maybe something that brings convenience. Like I've been living in China for the last 8 years, and we use WeChat there for everything from payments to, like, the velocity of money is much higher because it's much easier to send and receive money. And I think in Turkey, although we have a very well-established banking system, still the velocity is not as high, and payments and everything is much expensive. So stablecoins and payments built on stablecoins will bring that down, and I think it's going to make life more convenient as well overall.
Actually, I was going to say the ability to transfer money over a messenger app.
Right.
The ability to transfer crypto over a messenger app, for me, is the best application of crypto. That is why we're big investors in TON, because best distribution and have a blockchain and a line for integration. But that was going to be my one. Martin, your one?
I would say it's with stablecoins, you suddenly have a way to build the whole like the banking, checking, savings, payments, that account. In Argentina, you see it. You can not have I don't have a normal bank account in Argentina. I do everything through crypto. My card, I receive payments, I pay payments, I pay in my local shop. Everything happens through a crypto-enabled bank, which are how the exchanges there are competing, and it's so much better.
Okay, this thing's flashing at us. It's telling us to get off the stage.
More and more applications that we use in daily life, whether it be a fitness app or this, that, or the other, whether we realize it or not, they're going to be games. And crypto will be an enormously powerful gamification tool that people will be used. It'll be the rails for this to happen.
Amazing. Guys, thank you so much. Guys, thank you so much.
Thank you.
Thank you, guys.